Alright, let's be honest. After all the sleepless nights of doing research, assignments, and work, it's possible that some of you already forgot what we analyzed about Ford in our previous videos that you may or may not have watched. But hey, no judgment, we've all been there. So think of this as your crash course, pun intended, on everything we've unpacked about Ford Motor Company, from ruthless rivals and development trends to dilemmas and looking towards the future. We are recapping it all. This isn't just a repeat, it's your all-in-one wrapped up, straight to the point recap and synthesis to where Ford is now and where it needs to go. Buckle up, let's drive through this recap. To begin, let us start with the Porter's 5 forces to understand the competitive environment. For traditional parts, supplier power is low due to many options. However, for EVs, especially batteries and software, supplier power is high due to limited vendors like Panasonic or SK-On and high switching costs. Fleet and commercial buyers have moderate power, but retail buyers have high power, especially with growing awareness of sustainability and price. Ford's lack of direct sales in many states further empowers buyers and weakens Ford's control. The threat of new entrants is high. Despite high capital requirements, EV startups like Tesla have proven that innovation can bypass traditional barriers. The threat of substitutes is also high, especially among younger consumers who prefer ride sharing or public transport over car ownership. But for trucks and rural utility vehicles, substitution remains low. And lastly, competitive rivalry is high. Tesla, Toyota, GM, and Chinese EV players are pushing price wars. Switching costs are low, and brand loyalty is fragile. Recapping, Ford's two key rivals are Toyota and GM. Here is how they stack up. Financially, Toyota demonstrates high revenue, profitability, and strong liquidity. However, it is less aggressive in R&D compared to peers and has high capital expenditures. In the value chain, Toyota is known for its efficient just-in-time system and the Toyota Production System with strong after-sales support. But this JIT system makes it vulnerable to supply disruptions and global sourcing risks. Strategically, Toyota focuses on hybrid and hydrogen fuel technologies and is innovating with smart city initiatives. However, it lags in electric vehicle rollout and in autonomous tech development. As for resources, Toyota benefits from its strong production systems and Kaizen-based lean capabilities. Still, it lacks sustainable VRIO advantages. Most resources are priority level. Now for General Motors. GM invests aggressively in R&D and has strong interest coverage. That said, it faces profitability, volatility, and has weaker liquidity with high leverage. Its value chain combines just-in-time and just-in-case systems, enhancing supply stability. GM also has a large US production base, but is less lean and integrated than competitors. Strategically, GM balances internal combustion and electric vehicle production and leads in AI and autonomous driving via NVIDIA. Still, setbacks in its Cruise robotaxi program and ICE dependency slow its EV shift. Finally, GM's strengths lie in a strong brand portfolio and strategic tech partnerships. However, like Toyota, most capabilities are not rare or inimitable, offering only competitive parity. Now, let us recap the future key success factors for the automotive industry. The first factor is electrification and sustainability. The future success of the automotive industry relies strongly on the transition to electric and hybrid cars in all companies with a shift of consumer trends and integrating sustainability into all aspects of the business. Digital transformation and customer-centric innovation follows. The automotive future of success is also based on integrating state-of-the-art digital technologies with a strong emphasis on customer experiences and needs. Moreover, flexibility, adaptability, innovation, and collaboration is a must. The industry is experiencing unprecedented change, fueled by technological developments, changing consumer patterns, and international economic instability. In order to succeed in the future, organizations need to be more flexible, responsive, and collaborative to quickly adapt to changes. And lastly is operational efficiency. The automotive industry must be able to efficiently build the cars and sell these cars to customers for profit. These future key success factors aren't just industry trends, they're non-negotiables for survival and success. From going electric to embracing digital transformation to staying flexible and innovative, Ford and its competitors must adapt or risk falling behind. Ford's ability to compete in today's auto industry rests on these major core competencies. First is global supply chain and logistics mastery. Ford operates a sophisticated inbound and outbound logistics system, sourcing from around the world and partnering with logistics leaders like Penske. This allows high utilization of its trailer fleets and supports just-in-time production. Next is innovation in tech and sustainability. Ford isn't leading in EVs yet, but it's making serious moves. With products like the F-150 Lightning and Mustang Mach-E, plus massive investments in smart factories and electrification, Ford is building a tech-forward and eco-conscious future. Next is brand strength, dealer network, and customer marketing. Ford's global brand recognition, especially in trucks, is a major asset. Its dealer network spans widely, and it combines traditional marketing with online platforms to reach different audiences. And lastly, commitment to ethics and sustainability. Ford integrates ethical sourcing, supplier sustainability compliance, and water and energy conservation across its operations. In an industry shifting towards responsibility and transparency, Ford's proactive stance on green practices gives it a long-term edge with both regulators and customers. Now, let's put everything into one big picture, Ford's SWOT analysis. Starting with strengths, Ford has a diverse product line, from hybrids to commercial trucks, which keeps it flexible in shifting markets. It has a strong brand with global recognition, especially in North America, where the F-Series trucks are iconic. Its investment in innovation like driver assist systems and connected services shows strong potential. And lastly, its sustainability efforts from ethical sourcing to greener factories position Ford as a responsible modern automaker. But there are weaknesses. Ford is over-reliant on North America with over 70% of revenue coming from just the US and Canada. It has a limited presence in emerging markets and still lags in EV portfolio depth. Add in the heavy dependence on trucks and SUVs, and that exposes Ford to rising fuel regulation risks. Financially, the EV division is running at a loss, and major EV plans have been delayed or cancelled. As for opportunities, Ford has plenty. It can expand in emerging markets like Southeast Asia, scale up sustainable mobility, and capitalize on growing demand for smart, connected vehicles. Strategic partnerships can boost innovation, and Gen Z's shift to mobility as a service opens up new revenue models. But the threats are real. From regulatory risks to legal issues, supply chain disruptions, and rising EV competition, Ford is navigating a minefield. Even its EV brand perception is weaker compared to Tesla or GM. So, in summary, Ford is a legacy brand with real potential, but it needs sharper execution, broader global reach, and a much stronger EV game plan to stay in the lead. Let's break down Ford versus Toyota versus GM through the competitive strength assessment. Starting with technological innovation, the most heavily weighted factor at 0.2, Toyota leads with a perfect 5, scoring a full point, followed by Ford with 4 and GM at 3. Next, financial strength also weighted at 0.2. Again, Toyota leads with 5, reflecting strong liquidity and profitability. GM scores 4 and Ford trails with a 3. In operational efficiency, weighted at 0.15, Toyota tops the chart again with 5, earning 0.75. Ford and GM both scored 4. For strategic procurement and supplier management, Toyota scores 5, showing strong supplier integration. GM follows with 4 and Ford with 3. Distribution and channel strategy and customer-centric product design are weighted at 0.1 each, and all three companies score evenly with 4s, showing broad strength in these areas. Moving on to regulatory, sustainability, and environmental compliance, Toyota leads again with a 5 compared to 4s for Ford and GM. Toyota's hybrid leadership contributes here. In brand reputation, Toyota again takes the lead with a 5, while Ford and GM score 4 and 3 respectively, highlighting Toyota's global reliability image. Finally, in agility and market responsiveness, Toyota and GM score 4, while Ford scores 3, reflecting its slower reaction to market shifts. In total, Toyota comes out clearly on top with a weighted score of 4.95, thanks to consistent high marks across all categories. GM follows with 3.75, showing solid performance in financials and market responsiveness, though lagging in efficiency and brand reputation. Ford ranks third with 3.65, still competitive but behind in financial and agility-related areas. To summarize, Toyota stands out as its strongest competitor overall, driven by its innovation, efficiency, and brand strength. Next, let us discuss the space matrix analysis for Ford Motor Company. This helps us determine the alternative courses of action for Ford in today's business environment. First is the financial strength. Profitability is scored at 2.5, net income margin at 3.18%, operating margin at 3%, and ROA at 2% are all below industry averages. Leverage is weak at +2 rating as debt to equity ratio is high at 3.53, far above the industry average of 1.66. Liquidity is slightly better at +4 rating. Ford edges out peers with a current ratio of 1.16 and a quick ratio of 0.5, both above average. Cash flow is recovering, so is given a +3, Net income trend is improving. R&D spending is healthy at $8 billion. Cost of capital is high due to elevated debt levels and lower interest coverage. With this, it is given a +2 rating. Financially, Ford isn't in crisis, but it's not flexible either. It needs to deleverage and improve profitability to fund growth without overextending risk. As for competitive advantage, this is Ford's weakest area. Market share is moderate domestically but weak globally and in the EV segment, thus a score of -3. Product quality is good for trucks or SUVs, but EV quality is still catching up, score at -2. Customer loyalty is strong in trucks but weaker in newer lines, score at -2. Brand strength is trusted but lacks innovative edge in EVs, a score of -2. Technological know-how is improving but not yet industry-leading, a score of -3. Marketing effectiveness is strong in traditional media, however, digital presence needs improvement. This is scored at -2. So given this, Ford must rebuild its competitive edge, especially in EV branding, customer retention, and tech innovation. In industry strength, the industry Ford operates in is very attractive. Market growth rate is high as EV and mobility markets are expanding fast. Profitability is still strong in key segments. Demand variability exists but is still manageable. Competitive intensity is fierce but is not a big deal breaker. Barriers to entry are high as capital and regulatory hurdles protect incumbents. Tech changes are rapid but full of opportunity. With this, we have an average score of +4. So despite the pressure, this industry offers real rewards for those who innovate and move fast. Ford is in the right market. Now it needs to outperform. Lastly, environmental stability. This is the most volatile quadrant. As for economic conditions, inflation, interest rates, and market demand shifts are constant threats. Political stability like trade barriers, tariffs, and shifting regulations create uncertainty. Regulatory environment is tighter than ever with high compliance costs. Technological trends are disruptive and hard to forecast. Social-cultural trends are in favor of sustainability. That also challenges traditional auto models. Thus, we have an average score of -3.2. So with this, Ford must stay nimble. External forces are largely out of its control, making agility, foresight, and innovation more critical than ever. Summing it all up, Ford has low to moderate financial strength but only slightly outweighs its competitive weaknesses. Industry conditions are strong, especially with the growth in EV and mobility markets. And lastly, environmental stability is moderately unfavorable, particularly due to regulatory and technological disruptions. The resulting point of +0.37 and +0.8 lies in the aggressive quadrant, though close to the origin. So here we have a space matrix. So based on this places Ford in the aggressive quadrant, though it's just barely above the x-axis. The strategy? It is to go bold but be smart. Given the position that Ford is in on the space matrix, here are the following alternative courses of action that Ford must do in order to become a resilient leader in the next era of mobility. Instead of focusing solely on full EVs, Ford should expand its hybrid lineup. Hybrids are more cost-effective, easier to adopt in markets with limited charging infrastructure, and align with current consumer demand for fuel efficiency. Collaborating with tech firms, AI developers, and mobility platforms allows Ford to stay competitive in autonomous driving, connectivity, and ride-sharing innovation. By taking greater control over key inputs like batteries, software, and semiconductor sourcing, Ford can reduce reliance on external suppliers, lower costs, and better navigate disruptions. Vertical integration improves production efficiency, quality control, and long-term supply stability, especially in a volatile global environment. So, which course of action to take? Our implementation plan will further explain. Given the previous key success factors that we have gathered with their respective weights, we assess side by side each course of action to see which is the next best thing that Ford must do to remain at the top in the near future. So based on the calculations, ACA1 has a total score of 3.95, while ACA2 and ACA3 has a total score of 3.75 and 3.65 respectively. So, what does this mean? So since the alternative course of action number 1 has the highest total score, Ford should focus on hybrid vehicle development. This is to offer a more practical and lower risk path towards electrification. So, what's next, you may ask? Well, Ford should start with R&D and product development with the goal to develop competitive and adaptable hybrid platforms. Breaking down the actions further into responsible units, resources needed, and progress indicators show what Ford must need to put up and do in order to achieve the planned actions. Next would be to form strategic supplier partnerships to create a reliable and responsible supply chain for hybrid parts. So breaking it down further, it shows which area of the value chain is responsible with the right resources needed and indicators to make sure that Ford can make more informed decisions as to which supplier partner can maximize their business. Moving on would be dealer and channel readiness. This is to improve dealer networks and in preparation for hybrid vehicle sales and service. So given the breakdown for this, it focuses on trainings and improvement of digital services to ensure that employees and customers of Ford are well aware and prepared for the launch of hybrid vehicles. And lastly is to market launch the hybrid vehicles in key markets, which would then translate into a growth in market share. To do this, Ford must make sure that the launching and rollout of these new vehicles must be made fully aware by the market and that all parts of the value chain are efficient to ensure that these products reach customers with minimal problems and maximum satisfaction. To tie its strategy to execution, Ford's balanced scorecard outlines four key perspectives: financial, customer, internal processes, and learning and growth, each with measurable objectives to steer the company forward. Ford's top financial goal is to make hybrid vehicles not just aspirational but financially viable. By 2030, it aims for 30% of sales to come from HVs with an 8% gross margin. That means investing over $50 billion in HV development, reducing battery costs, and improving asset utilization by 2% annually. Ford's strategy includes expanding commercial services like Ford Pro and optimizing capital structure because reducing its high debt is just as important as growing revenue. Ford wants to be more than a car brand. It wants to be a trusted mobility partner. The goal? Boost Net Promoter Scores, push loyalty above 65%, and achieve a 5% annual market share growth in HVs. To do this, Ford is enhancing its digital presence with tools like Ford Pass, upgrading its service satisfaction, and training dealers to better handle the HV experience. It's all about personalized, convenient, and tech-integrated ownership. Ford is under pressure to deliver cars faster, cleaner, and better. The aim is to reduce production costs by 15%, cut cycle times by 10%, and lower CO2 emissions across all operations. It's leaning into Industry 4.0 tools like AI and predictive maintenance, and adopting modular HV platforms to shrink time to market by 20%. The target is 100% sustainability compliance in its supply chain while keeping defect rates low. And lastly, learning and growth. The future hinges on people. Ford is doubling down on its workforce by requiring 40 hours of training per employee per year, especially in HV and digital technology. It's targeting a 30% increase in leadership diversity and aiming for 85% plus retention in key roles. Programs like Ford University, Innovation Hubs, and DEI councils ensure that talent stays inspired, skilled, and future-ready. More patents and smarter teams mean more breakthroughs. To end, Ford isn't just battling competitors, it's racing against time. While it holds iconic status and core strengths, lagging in EV innovation, market expansion, and customer experience can cost it the future. The roadmap is clear: smarter investments, stronger branding, and sharper agility. Ford has the heritage to lead, but now it must earn the future. To be built tough is to make tough decisions.